Are you tired of losing more trades than you care to admit? Stop being stuck on the losing end of trading and hang out with me as I give you my most helpful tips that I've learned over the past year. Stay tuned. I'm going to tell you all about them. What's going on, everybody? I'm Mark Fleetwood. This is the Daily Grind Trader. And as my intro stated, today I'm giving you advice that I've learned over the course of the past year of trading. When I started this channel, I told you guys it was going to be my wins, my losses, my hits, my misses, all the mistakes I make, to try to make it all public so that people watching could potentially learn from my mistakes and not have to make them themselves. And with that being said, I've come across a lot of great information along the way. And I've been able to compile a lot of information to try to give you guys tips that I wish I would have had in my early days. So if you like this video, please hit the like button, subscribe to the channel, throw a comment out there, all that good stuff. It all helps bring my channel to the forefront. It all helps me to get a little bit more recognition and a little bit more play on the YouTube algorithm. It means a lot to me, so I really do appreciate it. We're going to get into the trading tips, and I'm going to have some charting to show how some of these tips work out. So first, number one, there is no one-size-fits-all method. No surefire guarantee, and if there was, everyone would be doing that same thing. You have to find a method that works for you. You have to find a method that works for your schedule. Do you work full-time? Do you not have time to day trade? Do you not have time to scalp all day? Or do you work and only have time to really scalp at night or in the morning before work, whatever the case might be? Know your schedule, know what you can do. Swing trading, day trading, scalping, whatever. Know what works for you. Plus, there's some temperament that goes along with that. You have to have the mindset for long-term holds or for short-term positions to be able to get out and know that you're getting out at a 2% profit or a 3% profit and be okay with that and not worry about how high it could go or how low it could go, whatever the case is. You have to make sure that your mindset works for what you're doing. I can't swing trade. I'm not good with longer term holds. I've tried, I've failed, I've moved on. The 1 hour time frame is the longest time frame that I trade. Typically, I'm 15 minutes, 30 minutes, hour at tops. So again, you have to find what works for you. And there's no trader, there's nobody on YouTube giving advice that can tailor something to you. You have to work it out on your own. I would suggest paper trading, or theoretically just putting an entry on TradingView and say a long position or a short position. On TradingView, you can go in at any time and sit here with a short position or a long position and say, you know what, if I were to short Bitcoin right here and say this is my top and this is a 2-to-1 ratio, I want to see if Bitcoin price goes down here. You know what, honestly, as I'm sitting here, this is a very likely scenario that we come back and retest this resistance and get close to this level. I wouldn't be surprised if it hits. But if you're not sure of a method, you're not sure what you want to do, paper trade or just set up positions for yourself. See what works for you. You don't have to jump right in and risk your money right away. It's not like playing free poker where everyone's a donkey and you're just getting everybody calling whatever, doing whatever you're doing. You're playing the market. You're always only playing the market. You're always going against the market. The competition is not going to change as you get more money in or less money in. So remember that. You just have to take care of you. Tip number 2. This is crucially important, and it's actually interesting that I put this here. This probably won't hit now. It looks like it's actually picking up strength very quickly. But tip number 2 is you have to not only learn to, but be comfortable shorting. Look, people jump into the stock market in 2020, 2021 with their stimulus money and this or that, yada, 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 and they think they're the damn Wolf of Wall Street because they made $76 in a bull market. They will be wrecked in a bear market because they don't know how to short. They buy, they hold, their money goes up, and they're probably crying right now because most people that are in the stock market that I know that are just holders, most of them are crying right now because they're in the red and they keep getting deeper into the red and they have no idea how to get up because they're down 40, 50, 60% at this point. You have to learn to short. You have to not only learn how to do it, but you have to be comfortable doing it because there are going to be points in time where you're going to be in potentially 3, 6 months of downward momentum where you have to short. It could be years. From 2018 to 2020 was a bearish market for crypto, and there was a lot of shorting, a lot of money to be made. And that is when you can really accumulate at those lower dollar values. You can short and accumulate, if you want to have long-term hold positions. But you absolutely have to learn to short. You have to learn to trade in a bearish or downward market. Tip number 3, this is critical. You have to be able to identify divergences. This was probably one of my least watched videos, but it's probably one of the most critically important things I've ever talked about, was RSI to price divergences. This here, you see this bottom, and the bottom again here, pretty much a straight line of price. Look at how wildly different the RSI is. This bottomed out down here at 25. This bottomed out at 32. This is wildly stronger here on the same low. This was ready to go. This was a bullish divergence. This was a huge sign to go long. It was an incredibly strong go long sign. And look, it hit the 200-day moving average, came down, consolidated a little bit, and then blew right through it. So again, bullish divergence, bullish price momentum, and then knowing that there's a good chance that you will hit resistance on moving average lines. Look at this, it hit resistance and fell through, hit resistance and fell through. This was a much stronger move. It hit resistance, it didn't fall all the way through, it just consolidated a little bit under it and then broke it. Now my thought process is now that this is going to come back and retest this resistance, and it's going to do what is called an SR flip, support resistance flip. So it's going to flip from resistance to support. If it hits here and holds this level, it will go up again. It will break up again, and then we can start testing resistance. Honestly, we can start testing resistance at 50K. If it comes down and goes through, we can go all the way back down to the bottom and see 45 again. That's just what it is. I'm not entering a trade here. I'm not entering anything yet because I want to see what happens on this line of support resistance. If it flips, we go long. If it falls through here, there's a lot of shorting opportunity to get all the way back through here. If it falls down through here and it's a clean fall back through 47.8, short down to 47.4, which was a very hard resistance here. I mean, once, twice, 3 times, 4 times. I mean, you see this line go back. I mean, it was a resistance many times. It might be a strong support. It might come down and only go this far. So it might only be a 1% short here. If it goes through here, there's not much in the way. This is pretty free flowing through between these two levels. There's not much left to go between that and 45,000. So this would be the biggest shorting opportunity. This one would be a small one. This one would be a quick hitter, get in and out. This might be an hour or two of 1% short. But you have to know your resistance levels. You have to know what the price action is. This was a top, it's coming down. It should theoretically hit this line of resistance support, flip it, or fall back through it. I'm going to show you AVAX. AVAX was a trade I made today. I went long on this support resistance flip, and this was a much larger support resistance flip because it went up, tested it, came back up, and then tested it again. And on this test, it also had the 200 period moving average and a bullish divergence on the RSI. So this was a position to go long. I got in here at 107.50 and came out at 114. And this was roughly 3 hours. And this was 6.2% on 10x leverage, so 62% profit in about 3 hours. One of my best trades. Definitely my best trade of the day, but one of my best trades overall. And now I'm looking here, price going up, RSI going down, or not necessarily going down, but not reaching the same high as before. The price peaked way above this peak, but the RSI did not meet this peak. This is a bearish divergence. This could move some pressure down, this could come back down and retest this 21-day moving average or 21 period moving average, in which case I wouldn't necessarily short this because we are bullish. We are above the 200-day, we are above the 50-day and above the 21-day. I wouldn't short this, but I wouldn't long this until we get down and see a low. We want to see a bottom. With these fractals there, we want to see a bottom somewhere around the 21-day moving average, and then we should get pressure to build back up off of this. But this here means that I would get out. I would not stay in a trade. If you're in a long, if you longed it here, at this point, get out of your long. It's going to come back down. This is showing that the bulls are running out of steam and the momentum's coming back. Tip number 4. Identify indicators that actually work for you in your trading style. I used to use the MACD, the Arun Index, the RSI, volume oscillator, stochastic RSI, 3 to 5 different moving averages, RSI, 3 moving averages, and fractals that I turn on just in case I miss a high or a low. I hide them, I put them on, take them off. If I'm not sure, if I see a high that I think I see as a high or I think I see as a low, I'll flip them on and just look at the fractals. So, okay, this was a low, this was a new lower low, this was a lower high. You know, just in case, you know, I wasn't really sure. It's easy to miss some of those things, but yeah, use indicators that work for you. Too many indicators can give you false signals, can give you conflicting signals, and just clutter your mind and give you analysis paralysis. You don't want that. Keep it simple, keep it what works for you. If you like stochastic RSI, cool. If you like volume oscillator, cool. If you like moving averages, whatever. MACD, a lot of people love the MACD, trade the MACD very successfully. A lot of people will trade the Arun Index very successfully. I wasn't very good with the Arun Index. I tried it, pretty cool indicator. It just, I didn't really work well with it. I'm not saying it doesn't work, because I think all indicators work for what they're meant to do. It's just whether or not your mind works with it to make it work for you. And it didn't for me. And look at that. We are very near our short position here. And that's, you know, that's it right there. That's one of the things that you have to know how to short, and you have to know when to short successfully. All right, guys, last tip. And this one is another one that's crucial, and many people don't do it, and they will likely continue to fail because they don't do it. Keep a trading log. Log every trade you do. Keep yourself accountable. Keep yourself accountable for your wins, your losses, whatever happens. You see here, this is from yesterday to today. I made 4 trades over the past 24 hours. 7 p.m. last night, I shorted Bitcoin. I shorted Ethereum at 1:30 a.m. I shorted Bitcoin again at 11 a.m. today, and that was a failure. That one was bad. And I longed AVAX at 12:45 p.m. So you can see here, my Bitcoin short. Trigger. Always have a trigger as to why you enter a trade. Make yourself write down what it was that made you enter a trade, so that you can, again, so that you can keep yourself accountable. It failed a resistance test with a fractal high and confirmation of all smooth moving averages trending down. And we can take a look at the trading view image, because you can save an image in trading view. Look, this was my high. This was the high. It failed to break and hold this resistance at 47.4. Came down 2 candles, confirmation from this high. The trend is going down. I entered here on this candle, and it actually took a while. It went sideways for a while. This was a trade. I'm glad I went to the movies and saw Spider-Man. Oh, the new Spider-Man, phenomenal. Absolutely phenomenal. Go see it. It's great. But yeah, I'm glad I was at the movies, and this actually didn't close until 9 a.m. So I entered at 7 p.m. last night, and 9 a.m. this morning it closed. When I woke up, and it was like, cool, I closed, I was in profit. But confirmation, failed resistance, and then came down to the next line of support resistance. This was an area where I was pretty sure we would get to, and I just barely wicked it before it started to come back up. So I got really lucky on this trade. But again, this is just showing you guys, you have to keep yourself accountable. 8.3% down, 23% up. 0 break even on Ethereum, and a 62% gain on AVAX. So a 2 out of 3 win rate with a break even, but much higher gains than losses. So that's a successful day. That's 77% win or 77% gain on the account. So I'll take that. All right, guys, that's it. This was a longer video than typical, but those are the rules. Those are the things that I've learned over time that have helped me actually become successful and be profitable in my trading endeavors. Hope this helps. As always, guys, until next time, peace.